G'day and welcome to the Off-Chain Podcast. Don here with you, and we're super excited to have Frederik Gregaard today, CEO of the Cardano Foundation on the show. Frederik is passionate about the intersection of blockchain technology and financial services, how this can reshape traditional business models and reintroduce trust into banking. He's a leader in fintech and blockchain with a background in banking, wealth management, asset management, and has helped him to shape policy and regulation in Switzerland and beyond. Frederik and the Foundation recently hosted the Cardano Summit at the end of 2023, and we wanted to discuss their plans for 2024 and why they believe they offer the best ecosystem for builders and projects. Cardano has some of the most die-hard followers and fans, and here is the CEO of the Foundation, our chat with Fred. Let's dive in. Frederik, how did you get interested in blockchain and fintech in general? I know you've been around the industry for quite a while. Maybe help our listeners understand, where have you come from? What's your origin story?
Sure. So I think I sort of shared a few of those stories in the past, but I think the one who's probably most related to your question is that what basically happened was that sort of in the end of the war in Yugoslavia and under the peacekeeping missions, I decided to leave the long-range reconnaissance department of the Danish army, and I joined business school. And in business school, this was quite hard transition for me because, you've been doing sort of ballistics math, but you haven't been doing differential math. And, it's a lot more academic than using your body every single day. So one of the classes we had was about basically macroeconomics and oil trading. And I thought, we need to make this real. So I walked into my local Danish bank and I said, I want to trade an oil future. And they basically laughed at me and said, you cannot trade an oil future. And I was like, why not? I have sufficient to put up the margin. I'm a client of your bank. You do offer that. So why can I not do that? And they were like, oh, you're not qualified to do that. You don't have the right education. You're not having the right type of account. And I got quite angry. And it turned out that, even though I was born in Denmark and even though I thought that I had sufficient money to take a margin contract and trade the contango, which was sort of my goal to really learn about this macroeconomics, I was simply not allowed to do so. And the more I sort of looked into that, it turns out that you actually need to be born in the right place, have the right education, have the right sort of, sponsor and all of those things to get access to a lot of things the financial markets has to offer. And that sort of turns into sort of this spiral where the rich gets richer and the privileged gets more privileged, and the rest is sort of left behind. And there's built these walls, and some of these walls are sometimes, called compliance, and other times these walls are just simply, about keeping people away from a lucrative asymmetric business model. So I got really interested in figuring out, how do you democratize access to capital markets, and how do you create an equal opportunity for everybody around the world to have access to what, the top 1% have access to, and what is the trade-off when you do that? And that's how I started actually dabbling in fintech. And then I joined a very large insurance company who was building a bank at that time. And I started sort of cross-selling sort of insurance products into investment products, into sort of classical banking products, and started teaching about that also to the average, citizens around, the pros and cons around that. And the rest is sort of history.
What year are we talking about when you say, you're leaving military and heading into or trying to crack into finance? How many years ago are we talking about?
Let's say about 20 years ago or something like that.
Okay, so about 20 years around finance, around fintech. Would you say that you were not disillusioned, but frustrated? For how long did that period last until you started going, man, something needs to change about how people have access to various, like you said, asymmetrical financial instruments?
Well, I think I never wanted to join finance, to be honest. I mean, it was not something that was on top of my list, right? I was reading about, my academics is about business development and innovation, and I was really more interested in technology and new business models. But it was sort of this frustration around me as sort of I found myself as an average Joe who had a little bit of money from the army, and, I was reading about business. Why couldn't I get normal banking services, right? Why am I not allowed to do so? So you can sort of think about it like I started frustrating, and I just got more frustrated, right? The more you when you start opening that Pandora's box, and I was in an investment bank when Lehman Brothers went belly up, right? I saw how suddenly, people were calling me and crying because they wanted to get out of positions, but I had no prices, right? So I started taking quotes on Post-its, like old style, So we were basically running a book on Post-its, right? And you get really suddenly you figure out, well, this Excel spreadsheets and sort of these price quotes and all of those things, this is not just about getting, some people more wealthy. This could also be the make or break for people's life. People were doing suicides who couldn't get a price in the market, right? Because they saw the whole life savings, what's supposed to bring their kids to college and was supposed to bring them into elderly living, was completely gone. In many countries, they don't have a pension system or they don't have anything to support it, right? And if you couldn't give them it didn't even have to be a good price. You just needed to give them the other side of that price to get out of a position to sort of be able to sleep. Otherwise, they were sort of looking into a shotgun, right? And they were sort of thinking, can I tell my wife that everything is gone now, or should I kill myself, right? So suddenly it got really real, right? And you just, you start getting more and more frustrated when you then see that technology suddenly is not available because somebody has a master switch, right? And that master switch is typically, at a broker or a prime broker or somebody like that. They're simply saying, oh, the market is moving too much now, it might hurt us. We just click the switch and then we let everybody sail, right? And then it's only the one who has sort of the magical Fred number, they can get they can get services. So what we actually did in my bank was I had a little bit more capacity because we were willing to take some risk and we were a bit more old style educated. So we basically opened up the VIP line to everybody. So we basically routed the general number into our trading desk and really tried to, it was not the best quotes we could give people, but we tried to give them a quote because a price was better than nothing, right? And that gave them this safety and security, right? And you really sort of start thinking about, can it really be so that, the lives and the sort of the heritage of families who worked hard on the land, farmers or whatever that might be, that they can be destroyed due to some person having the ability to click a button, or some person is optimizing, their private wealth, or is, skewing, a structured paper story in a way that they can just get another couple of basis points out of it. And if you, leverage that with 100x or 1000x, this is a lot, right? Yeah. So you start questioning, are the whole system going in the right direction? Shouldn't we more be helping the constituents? Shouldn't we more be helping the small and medium-sized businesses so they can do what they do best? And that is sort of, create, value to the community which they operate. And a part of that is financial, but another part of that is very much related to jobs and about, belonging to somewhere is something which I think is coded into the DNA of the human race. So when you start living through some of those episodes and then blockchain comes around, you're like, whoa, hold on a second. Is this really possible? Do we really have, the possibility of a type of infrastructure where there's no one person or a very small set of actors who can click a button and change reality or even close down this system? Is it really possible that you can, transfer money from A to B without, a lot of people skimming that in the middle or breaking up the value chain, right? I mean, for me, control is okay. I think I'm not against control in terms of, some people need protection. I think I got some very hard learnings in terms of opening up high frequency trading to the average Joe, right? I mean, that's not necessarily a good thing.
It's a little, yeah.
Well, it's not about fraud, right? It's just about greed, right? When you earn a little bit and you start taking more risk, and then suddenly you take some big losses, right? And then you get very frustrated, right? Yeah. If it's too easy, sometimes we as humans we sort of seek that way, right? Oh, yeah. So there's definitely some types of financial products which has been created to optimize the human need for greed. And scheme of them where others are really optimized towards practical appliances in the general capital markets and the general markets as we move along on the spaceship Earth, right?
Oh yeah, that's right. Also, you working in finance, frustrated with gatekeeping, frustrated with the technology involved, even like you said at one stage, using Post-it notes. How did you stumble upon blockchain? Did you go looking for financial or technological solutions to the frustrations and problems that you're having? How did you actually end up being in blockchain?
So it turns out I'm not a very good trader, meaning that, if I trade for myself, I get very emotional, right? And I'm not, so I dabbled a lot in candlesticks and technical analysis, and I did some black box trading. I did some early days coding, where you sort of, do trading systems, and quite quickly I moved to building infrastructure. So basically I built banks and built asset managers for a living. And for the bank I worked at that time when Bitcoin came around, I was very interested in it, but I thought the use case was relatively narrow, and I saw some problems around widening that use case if the code base was not enhanced. And then I was in Switzerland at that time, and then Ethereum and the Ethereum Foundation came around, right? And just before that, Bitcoin Swiss also started operating in Switzerland, and they had hard problems just getting a corporate bank account to pay salaries or to do FX hedging, right? So normal hedging models. They just couldn't get banking connections because the European Central Bank at that time already issued some warnings around Silk Road and around staying away from that. Yep. And because when you're in infrastructure, you don't take that type of risk, right? You don't need to sort of go into a private banking kind of operating model, right? So I was sort of forced not to help these players, right? Wow. And I was quite angry about it, right? Because I was like, hold on a second, the only exposure we have, and by the way, these were operating in a regulated fashion in Switzerland, right? So I don't see a problem if they're selling me some dollars and I'm giving them some euros, right? Or if I'm paying some salaries, right? Because they're paying social security to their employees, they're established, they're in the commercial register. I mean, what's going on here, right? So I started helping some of these emerging blockchain plays to basically get banks. So basically on the side behind my normal job, by building banks, I then help some of these blockchain players to get normal capital market services, because in a certain way they were unbanked, and some of them still are unbanked, right? It is actually quite hard for us as a blockchain foundation to get proper banking services. And the more and more I looked into the technology, the more and more I saw there was an opportunity here. If you could just change three things. And I think a lot of people were already back then speaking about the blockchain trilemma, but I was not so focused on the blockchain trilemma. I was actually more focused about how do we add a better identity solution into the blockchain. And with that, I'm not meaning sort of a banking identity. I was thinking about machine identity. How do you verify that information from an oracle is untampered with? Is there a way we can actually sort of do verified credentials or digital identifiers, which basically has the same level of trust as it would be if you have a classical counterpart in a trade or in a business relationship? So I was really sort of looking into that part of it. And the second part was when color coins were a big thing, I was really looking into metadata. And I was really sort of interested in, is there a way you can utilize not the blockchain maybe as a database play, but yet you can anchor more metadata points. So you have sort of this really good trade-off between on-chain and off-chain relationships, because I think it's really what drives businesses across nation states today is the ability to manage and trust data is really one of the key drivers of businesses. On the side of that, I was still trying to build better banks and better asset managers to make them really serve the clients, right? Not just sort of get rich, but really make them serve their clients and make a difference. And it's okay if they get rich on that journey, if they really do a good service, right? And I couldn't understand why it was that nobody wanted, better technology, more happy clients, lower cost. It just doesn't make sense, right? So I thought it was due to regulation and due to audit. So I thought, okay, how do I get closer to regulation and audit? And I said, well, you have to join a big four, right? So I started cold calling the big four and said, I need a job. But obviously at that time I was already a bit senior, so it was actually quite hard to get a senior job in a big four because that business model is also a little bit archaic, right? So it took me about, I think, 14 months, and I don't know how many presentations to convince them to hire me.
All right. Well, so how do you go from, again, seeing these problems, even being able to refine some of the ideas behind the problems? Let's fast forward to then about 2020, start working with Cardano Foundation. How did you end up working with Cardano? Why Cardano specifically, or how did that even get on your radar from Big Four to really making that jump into blockchain?
So when I was sort of pitching the Big Four, they always asked, how much money can you make for us? I mean, there was not about, how do you, many of the Big Four have these beautiful vision and mission statements on how they fit into society, and they go to the World Economic Forum and they have all these really nice things, right? But in reality, the only question I kept getting was, how much money can you make for us? Because the business model is quite simple. The money flows up into the system and is shared in a partnership, right? So the only thing they were interested in is how much money. And, after presentation number 10 or 11 or something, I got a little bit bored of doing, exponential spreadsheets, right? So I basically created a list of 10, I can't remember if it was 10 or 12, but it was around 10 sort of companies where I thought the combination of advisory services, legal regulatory help, and audit would scale or kickstart their business into escape velocity. And this was obviously not businesses I sort of, knew the founders of or anything like that. It was businesses where I've observed that here I believe I had a hypothesis that if you could take the best lawyers of the world and take the best auditors or some of the smartest consultants, bring them in very short term, you could actually create a situation where they scale on the delivery and they can actually change the world as we know it today. On that list was Cardano. Because I noticed that Cardano was not really shipping, and there were sort of these 3 entities, that time 3 entities, who were sort of, it was very unclear to me what was the problem. But I could just see that they were not shipping, but there was a good vision and a good mission. And I thought, okay, this must be due to this regulatory burden that is around, ICOs and all of those things. Plus, it could be maybe a product to market fit problem. So I thought, okay, if I come in with some of the sharpest, international lawyers and some really good consultants, I would be able to get this up to a situation where they really ship and where they move forward. I mean, this was a hypothesis, so this was an outside-in view without having, a specific access to the leadership or the founders at that time. And so when I was working for PwC, I kept coming back to that list and said, it'd be a shame not to do some of those things, right? And then I did have the opportunity to work, to start with, to work for something called Midnight, which is a product which Cardano is launching very soon. It's been a long journey for that. And then that actually turned into Cardano, where I did some work for the Cardano Foundation and IOG and Emurgo. And then that, when I was sort of looking at winding down in PwC, I was actually looking to going back into banking. I thought, it would be really great if you have the luxury as an investment banker to be able to work every single day on making the world a better place. Yeah. That's not something you normally do in, with a trade as banker, right? And they were very interested. So we struck a deal.
Right. I mean, that's amazing. Did you, just wondering, so Cardano, I remember way back in the real ICO days, 2017, 2018, Cardano had probably the most loyal, vociferous followers and supporters of any of the L1s, except for maybe Bitcoin. Maybe Bitcoin, is the big dog still. And then, like you said, fast forward a couple of years, and people generally in crypto saying, or blockchain going, okay, Cardano is still there. They still have some of the most vociferous, and I mean, I've heard people talk about it as like cult-like following with their supporters, not just early supporters, but people who've come on board along the way. And then, but still, like you said, still not shipped. And then suddenly you come about, and like I'm not trying to say, it's a solo endeavor, because I know there are many people behind the scenes doing, thousands of hours of work. What would you say it is that, because there are a lot of chains that have had lots of backers, big backers, not even just chains, but projects in the blockchain space, lots of promise, lots of backers, but haven't actually been able to launch and do the things that they've set out to do. What have you seen over the last 3 or so years at Cardano that has kind of flicked that switch, or it activated what was there already to go into market?
Yeah, that's an excellent question. I think first and foremost, you have to realize that Cardano is rooted in reliable, well-established technology and principles, and that's really paved the way for the Cardano blockchain to become, doable or even applicable to enterprise-critical technology. And one of the data points I look a lot at coming from investment banking is the fact that Cardano has been up running for more than 2,000 days. When you build banking infrastructure, you're super lucky, or you're trying to get to somewhere around 95, 94% uptime on a weekly basis, because you will take it down and you need to do some patches, you need some bug fixing and stuff like that. But the way distributed, decentralized network works, that's really not an option. So the fact that Cardano has been running for so long, I think that's is a testament itself to it. But when you then look at the GitHub activity, right, we are of the layer one of the 50 largest layer ones, we are the one with the most activity in our GitHub repositories, right? That means that we are not only running a very operation resilient network. When I say we are running, it's more than 3,000 stake pool operators who's actually doing that, right? But the Cardano is run by 3,000 something stake pool operators. But we are also changing the engine of the airplane, plus the wings, plus the propeller, plus all of those things as we're flying the airplane. And I think this is very, very unique. And to do that, a part of what you need to realize is that the value is not the technology stack alone. It's probably not even 50% the technology stack. It's your ability to attract people to believe in what you're doing and to see the vision in what you're doing, but also to have the right incentives in continuing supporting it, even though you might grow a little bit apart, right? I mean, I think there's about 4 or 5 million people interacting with Cardano every single day. And we have very, very loyal people, and I'm very proud about that. We seem to have, when people start coming to Cardano, it's not a lot of people leaving. We just keep adding more and adding more and adding more and adding more. But that also means that you will now have situations where there is parts of the community who might be a little bit more on the right side, and some are more on the left side, and some are a bit more on the libertarian side, and some people like with Atala Prism is speaking about, banking grade identity systems, where we from the Cardano Foundation has just launched the identity wallet in open source, which basically allows you to do machine identities and DITs and VCs and manage that, right? So I think there's, Cardano is becoming really like a large country in Web3, filled with blockchain citizens who has a belief that not only is there incentives and maybe even economic opportunities for you there, but you actually have an opportunity to change the status quo of the world we're living in today by deploying not just blockchain, but a combination of blockchain and other technologies to make this escape velocity happening. So I think a lot of this is the ability to work with people and give people not just a voice, but give them the ability to contribute and be a part of the active roadmap and the technology roadmap as it's shaping in the world we're living in today.
All right, Fred, man, there's so much I want to unpack out of what you just said. So, I mean, even some of the stuff you touched on, like the identity wallet, being some of the key issues that you saw in advance that you saw blockchain might be able to solve. But you also mentioned incentives. I'm just wondering, do you think it is the right kinds of incentives and incentive structures that have brought on board the right kind of people? Or do you think the people were already there and the right kinds of incentives and incentive structures have activated those people and attracted more? How are you thinking about incentive? Because from the beginning, when there was barely any Cardano, you had lots and lots of people very keen to build, very keen to spruik on behalf of Cardano, and the plan and the future and the roadmap, and building, like you said, lots and lots of commits there. Top number one out of the top 50. And so, how are you thinking about incentivization, incentive structures, and attracting, keeping, activating builders and participants, contributors?
So I'm an economist, right? So I very often sort of fall back to my early learnings about either, I'm more from the Austrian school of economics, right? But I really look at, what drives people, right? And I think there's a lot of theories around that. But there's two things I always fall back on, right? One is, is vision, mission. Are you part of something which you truly can identify with, and where you think there is a likelihood that you can become larger as a community than what you are today? And I think that has been misused a lot in blockchain, but also other operating models. But I think that's one of the key strokes of Cardano. So this ability that is not just about 6 people sitting in a boardroom in Switzerland, who basically takes decision, where we go, but that we have, already active voting systems, we have Catalyst, we have, all those things, and we're building even more right now in Voltaire to allow people to vote, have a voice, to contribute, to act, to deploy, and be part of something greater, right? This ability to be part of something, I think that's very important. The other part is, which you should never underestimate, specifically not as an economist, is economic incentives. If every time you do something, there's a trade-off, and sometimes that trade-off is time, sometimes that's economic resources, sometimes it's something else. And I think what's important to understand is that we don't really know today what is the optimum of running a decentralized distributed network at the size we're doing today. And there is a delayed effect when you change these parameters. So it's not like if you change them, 1%, and you can see straight away, oh, this was too much, you need to sort of wind that back, right? So there was, in the original academic research, there was a set of parameters set with some good hypothesis of why this would be a good starting point. But as we sort of move along and we get, more and more companies to deploy in Cardano, more and more people to interact with Cardano, we also see the regulatory space is changing. We see new technologies are emerging, which can anchor into Cardano, such as artificial intelligence, computable systems, drones, and so on. This also changes the fabric of the value contribution of Cardano. Therefore, I think one of the smartest things the original founders of Cardano did was they said, let's not hard code these types of incentives into the blockchain. Let's ensure that they can change over time and they're very flexible. And let's ensure that we have a way to change them, which is contributing to the greater good. Now, this sounds very complicated, so let me give you an example of the real life. So one of the things the European Union has been talking to me a lot about is, because one of my jobs is to speak to regulators and policymakers, is, you are technically using too much electricity on Cardano because you allow more stake pool operators than what is needed to run Cardano. Now, we are still only using like a fraction or maybe even less than a percentage of what is running on Bitcoin, right? But the fact that we allow everybody to be a stake pool operator, the European Union actually saw as relatively negative, because it basically, you basically might waste electricity compared to an optimal situation from a data science perspective, right? Now, my counter argument is that, well, who should decide who should be the stake pool operator? Should you, the European Union? Should I, the Cardano Foundation, a Swiss non-profit foundation who doesn't own or control the blockchain? Should it be like a committee of people who come together and they basically say, you can do, but you cannot? And I think this is very hard on the spaceship Earth we are living on, because there's so many different cultures, there's so many different, genesis, origins, and, life is complicated, right? So what is correct for you and me might not be correct in Nigeria, or might not be correct in Indonesia, right? So I think one of the things we're trying to do with Cardano is to ensure that this technology is available for anybody who wants to do so. So one of the first real big votes we did out of the Cardano Foundation was that we said, we actually want to understand what is the optimal, so the economic optimal amount of stake pool operators from an incentive perspective, right? So currently we have that at 500, and the question was, should we decrease that or should we increase that? So the 500 basically means that if you look at the incentives being distributed, the optimal amount would be 500 stake pool operators, but right now we have about 3,200 something looking at the stats today, right? So technically speaking, there's 2,700 who's not, let's say, from an incentive, like a pure economic incentive, not incentivized in an optimal way. And the question is, why are they there? Well, they're there because they believe in it. They're there because that makes them be part of a community and other things. So that means it's not an individual one. So we enabled a vote for stake pool operators to basically vote on this K factor, and we got so much feedback, not only the results of the vote, but also how we asked the question, right? A part of these learnings is also, how do you define the question? Do you say, it should be more or less, or do you say, it's 500 or 1,000 or 250? All of those things is a science in itself. And there's a lot of really good data points just from democracy as we know it today. But it's now mixed with this opportunity we have that we can do public votes and private votes, right? So when you do a public vote, it basically means that, everybody will be able to see how you voted. That means that you are accountable to your opinion. You cannot just hide and say, I believe in this, but you're actually voting somewhere else, right? Yeah, me too. And I think this is sort of one of those things where we're suddenly starting to challenge what the old Greeks did, a foundational work about how governance and how nation states should be run. If you think about Cardano as being sort of a nation state on Web3. So I think some of those things is really, 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 really important. And the other part of that is education, because some of these things are so complicated that, you won't have the time, or you won't be able to take the time because the trade-off is too big to sit down and try and run those models and verify those numbers. So a part of that will be you either, to the best of your ability, I think A is better than B, or you can say, what, I know this person who actually has sat down and took the time to understand that. And that is the system we're creating right now called delegated representatives. And what's interesting with delegated representatives is that they will act like a professional politicians on chain. But where normally professional politicians are voted in for a set amount of time, let's say 4 years or 5 years, right? Or whatever that might be, or until next election cycle or whatever. If you see that your delegated representative, because you can now see what they do, the vote is public, right? If they do something you do not agree with, well, you can pull your vote. That's what we think about in the science as liquid democracy, right? So you can basically say, actually, he's not doing what he said when he was campaigning. Well, let me just change the vote. And one of the reasons we don't do that more sort of when we run normal nation states is because it's too costly. And we already have a fairly low voter participation in many democracies, right? So it costs a lot to have a vote. There's a low participation already. So if you would have more votes or more abilities, the idea is that this might be watering out the process, right? And the other part is that sometimes politicians' work actually takes time, right? So, on day one, they just can't change the world, right? You need to give them some time to do things. But now for the first time, we have a technology called blockchain, which lowers the cost of ownership in terms of running this kind of liquid democracy. We have the ability to verify decisions being made over time because, the information is fully public. That means that you can run a complete different data science based on the decisions being made, if they actually were the right ones when you're looking back. And, that's always easy to sort of judge looking back. But it means that you can also now start building models portraying the future in a different way. And I think that's where AI also suddenly comes in. Because on these blockchains, because decisions cost money and every data points cost money, it's a complete different data pool you're operating with when you're doing machine learning and large language models on a blockchain-based data system. So not only is the full population of data available, but the quality of information is much better from an incentive perspective because it costs you something to add that in. So it acts as a natural filter for the quality of that.
Yeah, man. So you're talking a lot about what I'm hearing you mention different ways of thinking, even systemically or structurally, about how we relate to one another as human beings and how we operate collectively as communities, like small communities. What you were saying could be applied at a neighborhood level, at a city level, at a state, like nation state level, continent level, global level, for example, those kinds of things. But I also heard you mention or refer to Cardano as kind of like, or operating like a nation state also. It's just so I'm wondering, you're based in Switzerland, how do the regulators there and in the EU perhaps generally, but even as you are operating globally, how are you finding regulators engaging with you as a chain that operates kind of like a nation state in some senses, where you have your own, like you said, your own voting, your own leadership, perhaps your own currency. How are you finding them relating to you in that sense, where lots of these things have been the domain of the nation state for hundreds of years, if not longer?
So when I sort of look back to when I arrived in Cardano, the idea was hands off. We are not a regular. A layer one is not naturally regulated, so you don't find yourself with a banking license or an infrastructure license or something like that, right? On purpose, right? It was sort of designed like that in many aspects, right? But I think rightfully so as well. But I always sort of wondered, is it really the right thing to say, oh, if we are not one of the clients of a regulator, why shouldn't we talk to the regulator? And the sort of the strategy back then was, well, if you're not regulated, why would you wake up sleeping dogs? But I think what we saw then was we saw some blockchain plays which did not work very well, where they were sort of designed as pyramid schemes, or they're designed in a way to sort of fraud people or make it very few people rich and so on. And then, of course, the regulator steps in, I mean, if the regulator sees that the average Joe is getting hurt by something which sort of, is designed to do so, right? That's their job, right? That's their job to enforce. And when you saw the popularity of Ethereum, it's quite clear that popularity was really about how do we take Wall Street and do the operating model of Wall Street without the banks, all right? And that means that blockchain often is in the same box as capital markets, which means that you're always looking at the core set of regulation as capital markets is looking at. But when I look at Cardano, I look at Cardano solving business cases across a wide aspect of industries. And therefore, I'm really, really happy that, like 2 years ago, we sort of took the spoon in the other hand and said, you know what? It cannot be that the people who really spend millions, if not hundreds of millions in lobbying in different countries, that they just say, you know what? We are a regulated bank. We are a regulated exchange. You can regulate all tokens. Everything is security tokens. Doesn't matter. We have a securities dealer's license. And I was completely shocked when I heard that, because I kind of thought that many of these exchanges was fighting on our side. I thought that they saw the larger vision of blockchain. Yeah. I thought that they saw that what blockchain could become. But when you then sit in a room, right, where somebody spent, a couple of $100 million, conveying that, everything on a blockchain should be regulated under capital markets, and de facto you need to go through a bank or something who looks and feels like a bank to even use the basic functionality of a blockchain, I think you completely miss the point. Secondly, when you then go to a normal exchange or normal sort of custodian, right? I mean, the first question I always ask is, okay, so I would like to deploy a smart contract. And they'll be like, no, not happening.
You can't.
And you're like, why not? And they're like, yeah, well, you can trade this token. And I'm like, yeah, but I want to use the blockchain. And they're like, oh, I might help you to tokenize something. So we can issue a token together, and I can, take 50 or 200 basis points on that and, earn some money. And like, no, you're not listening to me. I want to use the blockchain to do track and trace, authenticity, or I want to do a DAO, or I want to do something relevant with the maturity of the technology. And then they look very wide-eyed at you and like, oh, that's not our business model, right? And when we sort of realized that, and I'm talking really binary in large strokes, but this was really the case for the majority and still is, right? We sort of said, okay, what are we going to do here? And the first thing we, obviously we're looking at is, should we spend, hundreds, if not, millions of dollars to do lobbyism and get, like a smart guy in a suit like me to stand up in Washington and speak to the senators and, and do that stuff, right? Because this is a professional business model, right? And in Europe, it's slightly different. You don't really do the same, but there's opportunities for wining and dining and dinners and, educational sessions and so on, but it's still sort of the same business model. Or is this game already run? And we decided that this game most likely is already run. So we set forward to build a RegTech tool, which is called the Cardano Explorer, which is hosted by the Cardano Foundation today. It is open source, right? So you can actually take a lot of these libraries and use that and build a better Explorer in whatever field you're doing. But we de facto built a RegTech Explorer, which shows workflows which policymakers and regulators are interested in. So we're looking at sort of the blockchain creed and saying, how do we verify that what all those people are showing in slides and in applications to regulators and so on, how do we make a regulator be able to verify what's actually happening on chain? So today, as you probably saw last week, we opened a new set of features who's talking about smart contracts, because smart contract can be so much. Some of them has escrow functionality, some of them has more like a custodian functionality, some of them are changing, right, things, so that you send one thing in and something else comes out. So walking down those workflows and having a tool which does not force a regulator or policymaker to read code, but allows them to talk to them in their own language, but also verify it so they understand that there's not a biased person in front of them. Of course, I am a bit biased, right? But there's not a person who's trying to get them to think A, but they cannot verify if A is correct according to current law. So the last 2 years, we've really been on that journey, and now we're really sort of interacting, and we have the luxury of having access to many regulators where we can have really good discussions and show them that blockchain is far beyond capital markets, but it also is important that you look at other sets of regulations, such as data privacy and other things, because these are also very important for these new use cases on blockchain. And it's important that people understand that a third generation blockchain, both from an incentive perspective, but also from a use case perspective, is dramatically different than the first two amazing iterations we had of blockchain, which is, of course, Bitcoin and Ethereum.
So, I mean, Fred, you identified people who you mentioned the classic, without naming any names, but like an exchange somewhere who perhaps even got started with the same fundamentally pro-decentralization, distributed networks philosophy or ideology that Cardano did. But somewhere along the way, the mission drifted when the incentives changed. And all of a sudden there's money and maybe tens or hundreds of millions or billions of dollars. And then they've gone from, something built for decentralized purposes all of a sudden to spending hundreds of millions of dollars in lobbying. How is Cardano staying, on that true north of, because you have, we just rolled up a whole bunch of different ways that you aren't, becoming the guy in the suit, talking to regulators, money under the table, trying to become a gatekeeper, but rather trying to maintain that decentralized, maintain that everybody gets a crack, everybody can build. Here's the open source proof. You can go check it out for yourself. How you stay in that course? Because surely as the money gets larger or as the pressures, become more intense, the incentives change to, okay, I must comply or restrict or conform, or it's just easier or more money or whatever it is. How are you staying the course?
I have to say, I have to give a big thank you to Charles Hodkinson, Jeremy Woods, Alex San, Ken Kurama-san, and sort of the original founders of what today as the public infrastructure Cardano, right? Because when they created, when they had the first thoughts about how to do this in the right way, not only did they design the system in a very good way, but what they also did was they said, there need to be an entity who looks at the long time optimization, who really looks at, a non-for-profit organization who's not optimized by a token going up or down tomorrow, who's looking at the long-term health. And we need to ensure that is bootstrapped in a way that also, even though that, IOG or Imurco or other entities are commercially driven vehicles, that they don't have, that we have good segregation of governance, right? So if suddenly things go a bit sour in one commercial company, that they don't come to, or don't have the ability to come to the Cardano Foundation and change the true north. So there's sort of foresight of putting in a foundation, non-for-profit, looking at the long time horizon, supervised by a Swiss authority, which basically means that we have private liability, full private liability. I might actually say it's not just about breaking the law, but if I stay away from that course, I have a lot of liability, right, in place to do this, because the world changes, business models works and doesn't work, right? But this foresight to put in a an entity like ours in something like this was really smart. And I think what a lot of people don't realize is when they look at us, they say, oh, the Cardano Foundation as a Swiss-based blockchain foundation, it must be like any other Swiss-based blockchain foundation. And that's what they got completely wrong. The original founders designed this completely different, and they had the foresight to do so. And I think that's a part of the fruits we're reaping today. Another part is that instead of us deciding what success looks like, we're basically taking an external framework. It's a little bit like cheating, right? But if you are in a public permissionless infrastructure, you have to kind of think about if you cannot decide what's right or wrong. That's sort of the whole idea, that you accept everybody from all courses of life and all religions and all political beliefs, right? What can we then do to show what good is, and how do you define good? So in lack of better work, or in lack of a lot of options, what we've chosen is basically United Nations Sustainable Development Goals. And that's really interesting, because when you start reading through them, there's 17 of those, and there's been a lot of greenwashing lately and so on, right? But when you start reading through them, there is a lot of thoughts and a lot of data points who basically guides a lot of the decisions we do in the Cardano Foundation today, either directly or indirectly through our 10-year strategy.
Well, so I'm keen to come back to the development goals as well, but just wondering one more thing on the regulation compliance front. It seems to be that across the world, in many different jurisdictions, the approach to blockchain is one of caution. It's an easy target, it's a punching bag for some, where you want to get some political points, go punch down onto blockchain. I'm wondering though, with things like machine identity that you talked about before, like verifying identity from an oracle, this identity is untampered with and is true. Are there ways that governments are benefiting from blockchain or Cardano specifically? Are there ways that actually, we're seeing governments come to you or helping or utilizing blockchain for the very many ways that we all believe in the industry it's making the world better?
There certainly is, right? And here you also have to be a little bit cognizant of, right? Because what ideally you want to do is you want to take a famous country, right? You want to take a country where, who's through generations made more things right than more things wrong, right? And you want to get one of those on a blockchain, right? Because then you're like, that's like the true North Star. But if everything works really well and there's strong trust in institutions and there's strong trust in the data footprint and the handshakes among businesses, institutions, and governments, well, you know what? Then blockchain adoption will go a lot slower, right? Because there's no real business incentive to do a marginal increase. Now, on the flip side, if you work with really chaotic states, or you work with like a very, very small, very business-driven sort of islands, right? You can say, hey, I work with a nation state, but they happen to be, 2,000 people sitting in a sandy beach, right? And you do, like a token there, right? I just have to say, that they're willing to take risk in a complete different way than the first one. So what we've been looking at is there a way we can find somewhere in the middle? Can we find a sweet middle ground of established nation states where we don't have to pay them to do a pilot or pay them to incentivize them to work on Cardano, but where we can show them the value proposition of a third generation blockchain? And there's two sort of nation states who comes to mind, sort of depending on how much time we have here, right? One is the country of Georgia. So the country of Georgia has for a very long time been a part of the Soviet Union. And when when the Soviet Union ceased to exist, this was actually a big opportunity for the country of Georgia, but it was also a big disaster. The capital markets collapsed, from one day to the other, right? And they've really been, looking at digital transformation, not just in terms of how do we optimize processes, but also how do we become a part of world global trade, but also how do we push the brand and our cultural belief system across the borders as a part of a value proposition for the produce they have. And one of the things what a lot of people don't realize is that the country of Georgia is actually the birthplace of wine. They have a very strong wine culture. Oh, right. So we actually work with the country of Georgia to put a part of their wine on the blockchain. When I say a part of their wine, I'm really talking about every single bottle. So we're just finalizing as being bottled right now in Georgia that they're doing 100,000 bottles from 23 different wineries in a full track and trace solution. And what's interesting here is that there's multiple machine identities involved in this, right? And one of those identities which is also involved is actually the nation state. So the nation state of Georgia is actually verifying and signing on chain per bottle that these bottles who's meant for export is conform with the 30-something plus quality criteria they have for export wine. And that means that you suddenly are able to verify different strong institutions and strong sort of trust anchors in the track and trace process per bottle. But this, of course, you cannot just do on a blockchain, right? You need to have another technology who anchors the bottle to the blockchain. We have another use case in Dubai at the moment, where Dubai is again one of those sort of countries where there is a lot of opinions, but they're sort of in the middle, they're in the sweet spot, right? And there we're basically looking at identity, mainly around firearms, because this is one of those places where you might lose a lot of freedom if you get to a situation that there is a global centralized database who holds the identity of all firearm users around the world. Then suddenly your nation state is, for the greater good, I might say, right? Sharing your private information around the world. So what we're working with them around is it possible to create a situation where you can increase the discovery and solve crime faster by being able to share data, but without actually sharing the personal private identifiers. So this basically will give you the possibility to basically safeguard privacy and data in the national country, but still enhance the discovery and the forensic works around that. And I think this is sort of these kind of use cases, I think is near and dear to our heart. It's not just about, how do we create a global population, but also how do we defend the human rights for every individual while still acting globally, right? And I think this is where blockchain is really, really interesting.
So one of the things that I really admire about what Cardano is doing, or at least philosophically, has been the focus on education. So actually trying to get people or help people across the globe to understand how can you personally, materially, and I don't just mean economically, but materially benefit from blockchain. How can you understand it? How can you utilize it? And even how can your country utilize it in some of those ways you've just been talking about there? Can you speak to how does the education component of Cardano, is that something does that follow the vision? Is that driving the vision? Where does that kind of sit for you, or even you personally?
So I think there's been a lot of debate, and this might be a bit controversial, right? But there's been a lot of debate about, how do you upgrade the social systems of the world, right? So how do you bring people out of poverty? Is it better to give them direct aid, or is it better to offer them an education? How do you get people to change from maybe, more resource-intensive productions to less resource-intensive productions, right? Where does technology play in? And I think one of the things we sort of started to see a lot of data points on is that the higher quality, the more education and the more educated the constituency or the inhabitants is, not always, but very often, they take better decisions in general for the community at large, right? Mm-hmm. And they are able to bring themselves out of poverty, and they're able to take some changes. Not always, right? But it does anchor a lot. Secondly, what we've seen, as I alluded to earlier, was that we have the situation where a lot of people, they understand blockchain based on Bitcoin. And Bitcoin is amazing and is a fantastic use case, but it's not the whole story. Third generation blockchains such as, Algorand, Polkadot, Cardano, and so on, we do offer multiple types of identity, multiple types of metadata and transaction history, and we do offer smart contracts and other things, which basically allows you to widen the use case and the application landscape. And what we've seen is that if you learn blockchain on Bitcoin, you very frequently miss the big picture. You get stuck into money transmissions and circumventing banks and so on. But if you learn blockchain based on third generation blockchains, and then you dig into Bitcoin, you will have a much more horizontal view on the appliances of this amazing technology. And if you look at it like that, then bringing free, high-quality education to the masses is actually extremely important, right? Because then you not only will have a situation where I'm not saying you can control the narrative, right? But you have the ability, and we're giving this away for free, by the way. So, we're offering this to other blockchains as well, and they can, put their own logo on it, right? I mean, it's quite sort of controversial what we're doing, including also academic and university professors, right? But we've now launched, 2 modules here in December, where you basically are taking from close to zero blockchain knowledge up to pretty good blockchain knowledge. The first module is very agnostic, and the second is a bit deeper on Cardano because there is differences on these technology stacks. And the hope is we can continue that journey, but then somebody will hopefully take it away from us. Because this is freely available information, right? We are hoping that somebody will translate it into other languages. They will build sort of learning applications on top of that. They would, incorporate that into business models. They would understand when not to apply blockchain because it's too expensive, or when to apply it because it makes sense. And they will be able to go one step deeper into the discussion with the compliance officers or the head of IT or the CIO about, this is actually why we should consider this. And I don't know if you saw, but there was an announcement from a large company coming out this week, which basically was saying, that they're now starting to deploy this educational content among their population of employees to ensure that they have, a higher quality in their innovation lab in terms of also using blockchain as a solution tool or set of tools for some of the problems they're dealing with in their transition of their operating model. So I think this is really about, offering high quality education, but we have a very solid focus specifically around policymakers and regulators and enterprises to start with, and then maybe a little bit less the average student. But just having this out there will allow people to take this content and make something which is amazing for students or even people who don't have a degree, right? I think if you look at some of the largest companies today, the inventors of those didn't even have a university degree, right? I mean, some of the largest centralized businesses who's run today, they're not sparking out of a university, Oh
yeah. I mean, it strikes me that for many or perhaps most people, it's that education that leads to an ability, and sometimes the ability is there without the education or requires a little bit more education. But then you need the incentives and you need the opportunity to be able to do something. And I think in blockchain, there is the opportunity, there is the incentives. And so in terms of onboarding people, it really takes that education that leads to even just being able to observe and understand the opportunity, but then also the ability to engage in it. And so for that, man, I'm really impressed with what you're doing in that regard, because I think it's incredibly meaningful in actually opening up the opportunity and the incentives for people who otherwise wouldn't be able to participate.
But I think the internet is a part of the problem here, right? Because there's some business models on the internet, right? Which basically means if you go on YouTube and you want to learn about blockchain, it's closely impossible for you to figure out if that's actually high quality, verified content which is accurate, right? Or if this is something which is sort of guiding you down the track to buy a token or to pay some money or to sign up for something, right? I mean,
buy my course.
I mean, today when you look at that, and now with the large language models really sort of flourishing, right? It's very, very hard to verify some of that content, right?
Yeah.
And I think that's again where we're sort of we're saying, okay, well then it's worth it for the Cardano Foundation to be a trust anchor here at first, and then other people can use us as the trust anchor and say we built an educational app or platform based on high quality content from the Cardano Foundation, which is verified by our community, right? And then suddenly, oh wow, if you can prove that and even prove that on chain, you're actually in a place where you feel more confident that what you're learning is accurate, right?
Yeah, Fred, that's really good, man. I'm very impressed with what Cardano Foundation or Cardano generally is doing in that regard, and that's actually again going to produce some really meaningful change. We are nearly out of time, but I do want to ask, thinking forward, 2024, 2025, what do you think are going to be some of the most significant trends in blockchain, Web3 generally, And what are you most excited about coming out of Cardano, if you can talk about it, over the next year?
So I think, unfortunately, we're going to have one or two large regulatory events in 2024.
Right.
It's sort of that they're begging to happen, and I do think that there's enough signs in the market that most likely will happen, and that potentially is going to disrupt the status quo in terms of who's the most respected and most adopted blockchains compared to new blockchains coming up. So that's going to be very interesting in seeing how that's going to fold out, if it's going to fall out. But I do think that there's a significant chance that that's going to happen. Secondly, I do think that so this year we're in now, I saw there was a lot of coordination on the regulatory and policy side. Depending on the couple of elections going on next year, we're going to see that probably is not going to be the case so much as it was before. It seems to me that politically we're leaning towards a more sort of everybody fend for themselves, and that's not necessarily a positive thing for blockchain at large. On the positive note, what you see is that the blockchains are maturing. That means the scalability is no longer a problem. Privacy is no longer a problem, right? So even on SanchezNet, which is our testnet we're running at the moment for the next generation of Cardano, you see that there's elliptic curves, which means that you can actually start deploying zero-knowledge primitives, so zero-knowledge proof on Cardano, right? So not only you're going to get sort of some really cool things around governance, right? But you're also going to get enhanced possibilities around enterprise privacy. Layer 2s is also coming off maturity, right? So I think what you're going to see is sort of this development where Web3 is just one leg of a blockchain. The new legs of blockchain is going to be classical operating models from track and trace and authenticity and certification. And you're going to see that, the ability to work together in partnerships where there's one large company or institution and many small has de facto not really worked very well because people, know that the large one will be able to take over. And I think now we have this situation where there's been a lot of work been doing on with DAOs, but also with blockchain at large and decision parameters, which I think will allow that new partnerships will form, which is asymmetric in terms of let's say the cap table or the sort of the market cap of some of those companies. But when you look at the decision power or the right to act together in those partnerships, they're going to be much more leveled out, which means that there's some chances who's going to be, taken, which is probably going to disrupt some markets. So I'm actually very, very bullish around the blockchain adoption for 2024. Not just looking at Cardano, but looking at blockchain at large. And I think, this general move towards legacy industries and the adoption of legacy industries, we won't see it as much as, was pitched originally. There were so many consulting companies going out spending millions saying, it's coming. But what we see is we're sort of at the bottom of the hype cycle, right? And we are starting to actually launch these use cases who really work, and we are able to verify and track that. And as people see that together with education, together with regulatory clarity in certain regulations, you're going to see a pickup in basically consuming this value.
All right, good predictions. I meant, it's been really good to chat today. Really insightful, kind of hearing more of your story, and even just to hear your philosophy, really, that seems to come out in every answer. I wonder if people are keen to hear more from you personally or find out more about Cardano and Cardano Foundation, where can they find you online?
So I'm not the strongest person on Twitter and LinkedIn. There's some people who's very good at that, but I am on Twitter and LinkedIn, so you can definitely feel free to follow me there. But other than that, I think the Cardano Foundation's main channels is a good place to go. So we both have one called Cardano Community and Cardano Foundation, and both of those I think is very solid places. And we can put some links into the show notes here as well, where to find our developer portal, but also where you can contact the Icon team, which is a bootstrapped out of the Cardano Foundation. It's a new way to write smart contracts, which has the simplicity of Solidity contracts, but the effectiveness of a verifiable blockchain as Cardano.
Yep, we'll make sure all those in the show notes. Fred, thank you so much for joining us today. Really, really appreciate your time and your input. Thanks for joining us on the show today. We hope you enjoyed this episode of Off-Chain. We love bringing you great guests like Fred, and hope we've inspired you to learn more about Web3, about technology, to think about the future, And as always, like and subscribe, or better yet, share this episode with a friend. Help us spread the word, and join us again next week for another exciting episode of Off Chain with me, Don. And until then, take care.